Let's get straight into this decision coming to the fore. We've seen interest rates being cut by 100 basis points, as I say, and a lot of concern around growth that has acted as the major motivator for the cut.
Yes, indeed. This comes as no surprise to the market, as we have already been pricing a rate decrease over the past 2 months. Given the inflation numbers that have been coming out over the past 6 to 7 months, where we have seen a deflation in the country, we did indeed expect a move by the central bank at this MPC meeting, given that in the August meeting there was no rate cut, and we were still expecting another 100 basis points cut in the third quarter of 2012. The 100 basis cut at yesterday's meeting comes as no surprise, basically.
Comes as no surprise. Let's take a look at the macroeconomic picture. As you highlight, we're looking at a deflationary environment over on that end, and just ahead of the MPC interest rate decision, we heard news that August inflation has slowed to 1.41% year on year from 1.88%. How are you viewing the inflationary environment relative to the growth picture in the country right now?
For the second quarter of 2012, we had growth of 8%, but this growth comes basically from mining exploration as well as transport investments. So it's basically mega infrastructure and mining investments that are driving the GDP growth in the country. And this is still not having a major impact in the consumers in the country. But on the other hand, inflation has been coming down as a result of an increase in the supply of local produce, that's beverages and food, as well as the favorable macroeconomic environment in the form of decreases in interest rate, which have allowed for more spending by the citizens. Mm-hmm. So what we have at the moment is a low inflation environment, high GDP, but this is still not filtering through to people's lives.
Let's take a look and unpack the health of the Mozambican consumer right now, and just what kind of consumer spend and trend are we looking at?
Sorry, I didn't get your question.
Just let's hone in on the health of the Mozambican consumer right now and what kind of trend we're seeing when it comes to spend into the economy.
Yes, local consumers basically spend a lot on food and beverages. So the changes, or rather the stability we have seen in the commodity prices internationally, that basically benefits the producer. For instance, we have seen local fuel prices unchanged for over a year now, and this is a main factor that drives inflation in the country. So Mozambican consumers are very basic, and they are very much impacted by whatever happens in the prices of commodity internationally.
Let's just close off with a view in terms of your outlook for this interest rate picture moving forward, as well as that of growth and inflation.
Yes, at the moment, the Metical has been performing very well against the rand. And this is, again, very important when it comes to local inflation figures, because Mozambique imports a lot of inflation from South Africa. So whenever the Metical performs favorably against the rand, that impacts favorably on the inflation rate of Mozambique. So over the next quarter, we expect some increase in the inflation rate in Mozambique as retailers start stocking for the year-end season. And other than that, we expect no major changes over the next 3 to 6 months.